Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening.
We've made a deal with United Kingdom. We've made a deal with China. We've made a deal. We're close to making a deal with India.
The United States is close to making a deal with India, says President Trump. Indian government sources say they've made a decent offer covering goods worth nearly $200 billion. Rule out any further concessions on agri and dairy sectors for now. President Trump reignites the tariff war, sends letters to 14 nations, including Japan, South Korea, Bangladesh, Malaysia, Indonesia and Thailand, threatening higher tariffs from August, leaves room for negotiating, saying tariff letters are more or less a final offer from the US. A late recovery on Dalal Street helps the Sensex and the Nifty end near the high points of the day. Financial stocks lead the rally. Mid-caps underperformed today. A SEBI study shows that retail investors lost over 1 lakh crore rupees in the derivatives market in FY25. The regulator is considering measures to limit retail participation in the futures and options market, but no decision has been finalized yet. A preliminary report on the AirIndia Ahmedabad crash is likely to have been submitted by the investigators to the Aviation Ministry. AirIndia has disbursed 25 lakh rupees ad interim compensation to 57 families so far. Documents of 75 individuals have been verified. That's a CNBC TV 18 exclusive. Israel steps up attacks on Gaza after 5 soldiers are killed in an explosion. President Trump and Israel's Netanyahu tout a controversial proposal to displace Palestinians from Gaza after a meeting at the White House. Netanyahu also nominates Trump for the Nobel Peace Prize. Tesla shares slide 7% as Elon Musk's plans of launching a political party reignite concerns over his commitment to the company's future. The EV giant's market cap erodes by nearly $70 billion in 2 sessions. Musk's net worth shrinks by $16 billion to $346 billion. Musk's ex argues that online content cannot be regulated as per the whims and fancies of government officials, claims the misuse of power by a union government at the Karnataka High Court. This after the Railway Ministry ordered the takedown of a viral video of a car being driven on railway tracks. More and more CEOs sound the alarm as artificial intelligence disrupts the labour market. A special report is coming up. Well, let's go straight to the top story this evening. President Trump has reignited his tariff war, even as he announced a 3-week extension to negotiate trade deals. Now, Trump sent out letters to leaders of 14 nations, starting with staunch allies, Japan and South Korea, proposing a 25% tariff. Now, here's what you need to remember. This is exactly similar to the tariffs proposed by Trump on the 2nd of April, so we've gone back to what was proposed then. Malaysia, South Africa, Indonesia and Thailand also face tariffs. Trump said, and I quote, "If you want to play ball, this is how we play," end of quote. So countries have seen their tariffs rise from what was announced in April. Bangladesh faces a 37% tariff compared to 35% in April. Myanmar, Cambodia and Laos also face higher tariffs. The new rates will apply from August, and President Trump has left room for negotiations, saying the tariff letters are, and I quote, "more or less a final offer from the US." So where does all of this leave India? Well, President Trump says a deal with India is close. Here he is speaking about the new raft of tariffs and a possible deal with India.
If they call up and they say, would like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now, yeah.
Are the tariff letters that you sent today final offers, or are they negotiable?
More or less final offer. We've made a deal with United Kingdom. We've made a deal with China. We've made a deal. We're close to making a deal with India. Others we met with, and we don't think we're going to be able to make a deal, so we just send them a letter. If you want to play ball, you have to. This is what you have to pay. So as far as I'm concerned, we're done. We're sending out letters to various countries telling them how much tariffs they have to pay. Some will maybe adjust a little bit, depending if they have a cause. We're not going to be unfair about it. And actually, it's a small fraction compared to what we should be getting. We could be asking for much more. But for the sake of relationships that we've had with a lot of really good countries, we're doing the way I do it.
Well, that's President Trump. Parikshit is standing by with more. Parikshit, President Trump there saying that we are close to a deal with India. So what are we hearing from the Indian side on where things currently stand? A trade deal today, tomorrow, anytime soon?
Well, US President Donald Trump now has to take a final call on the India-US trade deal. Sources telling CNBC TV18 that India has made a decent offer and now the White House is assessing the proposal and the market access gains that US companies will actually get. We learned that India's proposals cover almost $150 billion to $200 billion worth of goods traded between the two nations. US officials now have to indicate whether they want to negotiate further with India or have a deal at this stage. India is unlikely to make any further concessions at this stage, and there's going to be no compromise on red lines, which are wheat, rice, maize, dairy products, and also genetically modified crops. There may be some concessions with regard to blueberries, pecan nuts, but those are products which are not consumed in a large manner. India cannot open up sensitive agriculture and dairy sectors for the US or any other country for that matter. Sources say the deal that India has proposed will be a win-win for both India and the US. While US would get market access for its industrial goods, India would get significant access for labor-intensive goods. The deal will include quotas for lower tariffs for some product lines. Officials we spoke to are also indicating that India is not putting all its bets on the United States. While we would welcome any trade deal with America, India is also negotiating trade deals with other nations and is looking at all options to increase the export footprint as well. If we speak about the trade between the two nations in FY24, it was around 129 billion US dollars. There is a 41 or 42 billion dollar trade surplus in India's favor. And this is something that the US has been objecting to. And India has been saying we are buying more energy, we will buy more defense equipment, and that trade deficit will be automatically bridged as well.
All right, Parikshit, many thanks for joining us. So that is where things currently stand. We are counting down to see whether there could be an announcement on a trade deal between India and the US as early as tonight, or perhaps over the next few days. Now, from shock to regret, the 14 countries facing higher tariffs have responded to President Trump's letters. Japan's Prime Minister Ishiba has called the tariff announcement truly regrettable and said that they will continue with negotiations. Japanese exports account for over 4% of total American imports. In Seoul, South Korean leaders have promised to accelerate tariff negotiations with the Trump administration to swiftly resolve trade uncertainties. Reuters reports that Thailand's finance minister has called the latest tariff rate shocking, but remains confident that it will drop to levels similar to other countries. Trump has threatened a tariff rate of 36% against Thailand. Malaysia says it will continue to engage with the US government. Asian markets did not react much to the latest tariff salvo. Stocks gained across the board, with South Korean Kospi rallying 2% and the Hang Seng gaining about 1%. Market watchers and investors believe Trump will de-escalate from the higher tariffs before the August deadline.
What President Trump was trying to do was say, bring your investments into the United States, bring your production into the United States, bring your technologies into the United States, and we will give you a protective barrier of tariffs to protect you from unfair competition from other countries. And right now, President Trump has sent out a bunch of letters saying, okay, you don't give me an offer, here's my offer to you, 25% tariffs. I think that surprised everyone by the fact that they were so low. But I think that's also President Trump's way of saying to everyone, let's talk, and let's talk now.
The market is assuming that this gives more wiggle room for deals, and potentially is another case of Trump escalating to de-escalate. So markets have reacted, I think, fairly calmly given these rates. I think for India, it's interesting that India did not get a letter, and I think that does suggest that a deal could be actually very close and could be potentially on a relative basis quite positive for India.
Well, that's the latest there as far as Trump and tariffs are concerned. But let's talk about the market action. The Sensex and the Nifty made a smart recovery in the last hour of trade today. Financial stocks helped the Nifty and the Nifty Bank closing in the green. That's the picture there for you. The Nifty up by about 61 points. The Sensex closing 270 points higher. The mid-cap index was down in the red today. The Bank Nifty was up by over 300 points. Let's go across to Nigel now. He joins us to wrap up the day's market action, pretty much mirroring what we saw across Asia. Relatively calm, Nigel, in the wake of all of the tariff uncertainty.
Well, the markets were quiet for majority of the trading session, but there was a bit of a spurt in the final half hour of trade, and all the gains that came about today were actually accounted for in the final half hour of trade. Otherwise, trading has been more or less lackluster on the domestic front. We're waiting for the result season. While on the global front, you're waiting by for Trump's final tariffs that are likely to be announced. But waiting by for that quarterly earnings, well, we did have quarterly updates that came about. And that gave you a bit of a sneak peek into what the numbers are going to be looking like. Kotak Mahindra Bank delivered a very, very good set of numbers. All eyes will be now on the profitability or the NIMs. So we'll wait by for that once they declare their numbers. But for the time being, the growth looked good. Titan on the flip side, well, the growth wasn't as much as what the street was anticipating. And that's why that was one of the big losers in today's trading session. What else did come in for profit again? You had Dr. Reddy's that was lower and Bajaj Auto as well. Both of them from the Nifty pack itself were lower. While on the flip side, Eternal and Asian Paints did continue their uptrend. In fact, Asian Paints in the last few trading sessions has been a bit of an outperformer after underperforming for the last 18 months or so. From the broader markets, one segment that's been getting hit is the capital market plays, and that's because of the regulations that are coming about. The notable losers today were BSE as well as Angel One. Both of them did come in for profit taking. Brokerage notes do continue, and they're having their impact. So Macquarie went ahead and downgraded Oro Pharma. That stock, in fact, was under pressure today. And Belrise, the newly listed entity, Jefferies came out with the note. They're optimistic on the prospects. So that one, in fact, did quite well. But you'll have to say the Nifty is still in that band of from 25,250 to around 25,750 or thereabouts. Trump's tariffs will give further direction. But as of now, the street believes that maybe, in fact, the worst case scenario will not play out. And the hope is that maybe, in fact, the best case scenario could play out. If that's the case, then the markets could continue their uptrend once this global uncertainty is out of the way.
Well, staying with the markets, a SEBI study shows that retail investors lost a whopping 1 lakh crore rupees in the derivatives market in FY25, with losses widening compared to the previous year. However, SEBI's curbs towards the end of the calendar year 2024 brought about a decline in the number of unique traders and losses that individual traders made. Hormuz is standing by with more. Hormuz, this has been the big story through 2024. We saw the regulators intervening. We saw the government expressing concern. And the numbers tell you why the concern is warranted and legitimate.
There are certain things that don't change, and what has not changed this time around as well is the fact that retail traders continue to make losses in the futures and options market. Now, as per the SEBI study that was put out last evening on the regulator's website, most of the parameters that you would see when it comes to the options turnover in a notional basis and even on a premium basis have declined on a year-on-year basis. However, when you look at that from a 2-year time frame, that number is still in the green and significantly in the green at that. But the big number, as we just mentioned, the losses that the traders made in the equity derivative space in FY25, 1.05 lakh crore rupees, and that is a 41% jump from FY24, when that loss was just around about 75,000 crore rupees. So the losses have mounted on a year-on-year basis. Now, when you take a look at the number of traders remaining loss-making, 9 out of 10 in FY24, that number remains the same in FY25 as well, as has been the case over the last 4 years. But if you take a look at FY25 on a quarter-on-quarter basis, there has been a slight reduction when you compare Q3 to Q4, and that is reduction in terms of the number of traders and the losses that these traders have made on an individual basis. Now, if you take a look at the number of traders, that has come down, and if you take a look at the average loss per trader, that too in Q3, which stood at around 63,000 rupees, has now come down to just under 58,000 rupees at the end of the fourth quarter, and that is as a result of a slew of measures that SEBI put in place during last year. They started that in November of last year. Around 6 to 7 measures were put in place until April of this year, which is why you see that result, that difference, that drop between Q3 and Q4. Now, despite this, India continues to remain a very highly traded derivative market as per the SEBI study, and that is evident from the 5-year CAGR that you see. The index options notional CAGR over a 5-year basis has doubled, and that shows the kind of activity that you have seen in the F&O space. And the curbs that SEBI put in place over that 5 to 6 month period from November of 2024 that has impacted traders across categories. The biggest hit, of course, is the traders for a smaller amount, the traded value of less than 10,000 rupees. That figure is down 30% from last year when you take a look at December 24 to May of 25, and across categories as well, from 10,000 to a lakh, from a lakh to 10 lakh. Those figures are also down over 20% each. But as the categories grow wider, the decline in the number of traders also narrows, but across categories the number of traders has seen a dip. So certain things have not changed the fact that the retail traders, 9 out of 10, continue to make losses. The losses have widened, but with the curves that SEBI has put in place, we would hope that FY26 puts up a better picture.
All right, Hormuz, many thanks for joining us. And US-based trading platform Jane Street has told its staff that it will contest the ban by SEBI. As per Reuters, the firm has said that its practices in question were basic index arbitration trading. Remember, market regulator SEBI had barred the company from trading in the securities market. The company has also been ordered to impound over 4,800 crore rupees for allegedly manipulating stock indices through derivative positions. This is the highest impoundment that SEBI has ever imposed. Now, Kotak Mahindra Bank shares gained after its June quarter business update reflected a stable performance. The bank posted steady momentum in both lending and deposit growth, even as gains in low-cost deposits moderated. The loan book rose 14%, while deposits continued to grow at a healthy pace of 14% compared to last year. And more business updates. Titan shares down to a 3-week low after its first quarter revenue growth was below market expectations. The company's growth weaker than its peers in Q1. Despite a low base, brokerages have also flagged that growth was mostly on account of an increase in ticket size and not a rise in the number of buyers itself. We will head to a break, but up next, a preliminary report on the AirIndia Ahmedabad crash is likely to have been submitted by the investigator to the Aviation Ministry. That and more when we return. A preliminary report on the AirIndia Ahmedabad crash is likely to have been submitted by the investigator to the Aviation Ministry. News agency ANI cites sources saying that the initial report is now with the government. The crash killed 241 people who were on board the plane. According to authorities in Gujarat, 19 people died on the ground. Air India, meanwhile, has disbursed 25 lakh rupees as the interim compensation to 57 families so far. Documents of 75 individuals have been verified. Madhiha is standing by with the exclusive details. Madhiha, take us through where things currently stand in terms of the compensation payout. Air India had said that 25 lakh rupees would be the immediate payout to tide over any kind of emergency exigencies at this point in time. Give us the breakup of how the compensation has been disbursed so far.
So there are two different payments that families of the victims will be receiving. Air India has started releasing the interim insurance compensation of 25 lakh rupees to families of the victims. The final amounts will be decided by the airline's insurers, is what we are learning, depending on the financial conditions of each family. So those who lost their sole breadwinner may receive more, while families not entirely dependent on the deceased could receive less. This means that payouts will vary from family to family. Air India is handling the compensation for the 12 crew members separately. So the process for the remaining 248 victims, including 229 passengers and 19 people are being processed, 19 people on board are being processed separately. So far, Air India says 25 lakh rupees has been dispersed to 57 families and documents for 74 more individuals have been verified. The airline says it's actively engaging with the remaining families to release compensation as quickly as possible. Now, in parallel, the Tata Group had announced 1 crore per deceased, which will be paid from a 500 crore trust, about 50 crore of which will be used to rebuild the hostel building that collapsed in the crash. 50 crore will be allocated for treating the injured, and the rest will be used for long-term support for the families of those who lost their lives in the crash. But the controversy emerged over claims that Air India is forcing families to sign papers disclosing their financial dependency to the deceased in an attempt to slash compensation in payment. So Air India has categorically denied this, calling the allegation unsubstantiated and inaccurate. The airline says it's only collecting basic family information to ensure basic financial information to ensure that payments go only to those rightfully entitled, and adds that asking whether a family was financially dependent is a reasonable and necessary step in the process to ensure that payments to those most in need of assistance are processed faster.
All right, Madhya, many thanks for joining us. That is the latest on the compensation that is being provided by AirIndia to the families of those who lost their lives in the air crash. Online fast fashion giant Shein has confidentially filed for an IPO in Hong Kong. The move is seen as an effort to apply pressure on UK regulators after facing delays for the London listing. The Chinese-founded Singapore-based retailer submitted a draft prospectus with the Hong Kong Stock Exchange last week and is seeking the approval from China's securities watchdog. Now, shares of Tesla slipped nearly 7% in trade after Elon Musk announced plans to form a new political party. The move eroded the Tesla market cap by more than $68 billion in a single day. The drop marks one of the worst single-day performances for the company this year. Musk's fortunes took a beating also, losing $15.3 billion on the 7th of July. As per Bloomberg's billionaire index, Musk's current net worth stands at $346 billion. And staying with Musk's social media platform X has argued that online content cannot be regulated as per the whims and fancies of government officials. Ashmit joins us now with the action from the Karnataka High Court. Ashmit, fireworks in court once again today.
Well, indeed, the brief that appears to have gone from Elon Musk-backed X to the lawyers in Karnataka High Court is to not mince words. It was just in the previous hearing last week that we'd seen B.G. Raghavan, the advocate appearing for X, arguing about how any Tom, Dick and Harry officers had been issuing takedown orders. Today, in today's hearing, the very same counsel arguing before the Karnataka High Court that the complicated subject of online content regulation cannot be left to the whims and fancies of government officers. In fact, the claim that was made by the ex-counsel is that the rationale with which some of these orders are being passed is that I think so and therefore it is, and that this is something which is untenable, which is not permissible under the framework of the IT Act and therefore needs to be struck down. Now, all of this was, of course, in reference to the recent takedown orders that had been issued by the Railway Ministry with respect to a video that went viral of a car driving on the rail track. And here again, the ex-counsel argued that a train running on train tracks is not news, but a car running on train tracks becomes news, and therefore that video being posted online makes no difference whatsoever to the railway safety, and therefore railways has no business issuing takedown orders. And this is the example that was used by the ex-counsel to manifest how there are orders being issued under the threat of removing safe harbor protection from X, the social media platform, and that none of the safeguards that have been prescribed under Section 69 are being complied with. These are arguments being made by X. You were yet to hear from the Government Counsel, Solicitor General Tushar Mehta in this case.
All right, Ashmit, many thanks for joining us. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Stay tuned. We're back in a minute with more.